Hey everybody, it's me, Gregory Mannarino, back for my post-market wrap-up on this lovely day. Now, why would I say a lovely day? Because every day is lovely. No matter what happens, if you're still breathing and you're healthy, it's lovely. None of this other stuff, this market stuff, what does it really matter in the grand scheme of things? Because one day, you and I, we won't even have the opportunity to live and breathe and laugh. So every day is lovely. And the reason why I'm overstressing lovely, because a lot of people wrote to me today telling me I should stop saying lovely. No, I'm not going to stop saying lovely. Because, like I said, it's all good. It's the truth. All right, today is Wednesday, April 25th, 2018. And people, I mean, schizo market, off the Richter scale, completely bizarre. Now, here's the funny thing about what's going on right now as I am doing this video blog. The closing bell went off just a couple of minutes ago, and they're eagerly, the Confederacy over there, the Confederacies, plural, are eagerly, they're eagerly awaiting earnings results. Why? I don't know why. Are earnings driving the market action? No. And they know that, but they want you to sit there and pay attention to those earnings because they're just so important. Look, this market is being driven obviously by other factors, that yield curve which is flattening out, the rate issue which I talked about this morning, and we had a market. Let's just go over that real quick. So the market started off flat, then dived. The Dow Jones Industrial Average was down over 200 points. Then all of a sudden, completely reversed, was up over 100. And after all that, the Dow Jones Industrial Average finished up about 50 points. The S&P 500 almost at the flat line. The NASDAQ finished actually negative. So whatever the Confederacy is trying to spew out of their mouths right now with regard to earnings, it's a non-event, in my opinion. Doesn't matter. Earnings don't matter right now for this market. But we're going to need to watch how this plays out moving forward. Another thing I want to cover real quick, because I got hit with a whole bunch of emails about this. It seems that this market volatility is stopping a lot of you traders out. You have to understand, this environment we're in, this volatility is crazy, so you have to loosen up those stops. If you have tight stops like we've been used to for the past X amount of years now, not going to work in this environment. You're going to find yourself getting stopped out, and that's not a good place to be. We, as traders, need to understand that this market is going to require us, to accept or be able to accept larger swings. That's the truth. It's difficult. There's no doubt about it, but this is the new norm. Before this, the last, almost decade now of no volatility. Well, this is how markets work. A lot of people don't remember this kind of stuff, but this is the truth. This volatility like this, maybe today was a little over the top, I don't know. But these swings here, I think are going to be the new norm. So, if you're so inclined, and always do your own research, loosen up those stops so you don't get stopped out. Now, the dollar. Let's talk about the dollar real quick. Dollar caught a bid today, putting pressure on precious metals. Cryptos got pressured today. We need to watch these kinds of things, people. This is another thing I want to talk about real quick. On top of the sell-off in the bond market, which continued throughout the day, the market is trying to, in my opinion, trying to rebalance a little bit here, getting used to these higher rates or a rising rate environment. Now, understand this too. It's not so much where rates are. I mean, historically, this is really low, but it's the pace at which they are rising that's rattling the markets. And look, now it's no secret, my God. For the past decade, the Fed has been artificially suppressing rates in order to create an environment of risk, nowhere else to go but stocks. And that's what's inflated the stock market bubble. But with bonds becoming more attractive because they're yielding more. Okay, this should be simple to understand. It makes stocks less attractive, so stocks will sell off. And these multiples that we're trading on are going to have to normalize. Now, if you really put this together, like I just explained to you, you'll understand a lot more than most people out here. So let's watch this market. Let's keep our eye on this. The trend to me still seems lower. Obviously, I'm still in this position here. Still an initial small position. We'll see what happens tomorrow. Don't get all rattled by this volatility. This is the new norm. Like I said, so many people wrote to me today about this, and a lot of you got stopped out. That's it. That's just the way it is. Anyway, let's get used to it. Let's see what happens tomorrow. And you know where I'll meet you tomorrow. We're going to meet right here in this spot, and we will reconvene at that time. See you then.